Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't, and just so you don't miss an episode, turn on that notification button just in case, because sometimes you're subscribed to so many things, you're waiting for your next video from me, and just doesn't, come because it gets buried beneath everything. That way, you don't have to worry. You're going to be notified of videos coming up. And lastly, the disclaimer: nothing on this channel is financial advice, just my opinions and what's in the markets. So let's go into today's market and all the action. So let's go. Let's look in the economic data. This is what drives the markets, regardless of what people say. Retail sales. Look at the actual 1%. Actually, less than expected, 2%. And the other thing, look at this. They changed the data. If you look this channel and yesterday's videos, you can tell that's the theme with the jobs numbers. I guess they're going to be doing that with all the data. So let's see, where is, of course, they can't just, yeah, let's see, now I have to go back, revise. Yeah, there it is. April sales figures were downwardly. Why don't they just say they were revised downward or negatively revised or downwardly revised to 2% rather than staying flat? So, yeah, this week's was probably negative too. They'll just tell you that next month. But yeah, so we have that negatively. Last month's was downwardly revised. So you got that's very poor retail sales numbers and industrial production. That's the Ukraine and Israel foreign aid. That's probably what they're making, bullets and bombs. So capacity utilization that increased. Industrial production, yeah. So manufacturing, yep. So inventories are the same. So yeah, I mean, very poor economic data. Looking at this is interesting stuff. Retail sales increased at a slower than expected May, as I mean, this was an abysmal failure considered that the expectations were flat, but last month they weren't flat, they declined as high interest rates and inflation continue to weigh on consumers. Yeah, high interest rates and inflation, the double KO. Look at that. Retail sales trickled down, revised from the Commerce Department, uh, excluding auto and gas. So yeah, so there is. Let's keep going. Look at this. Sales at furniture and home stores. Well, yeah, no one owns homes, so if you don't own homes, there's no point in buying furniture. So yeah, so there you go. Gas stations lead to declines. Yeah, so yeah, there it is. They if you don't have to drive to work, don't have to buy gas. So but the jobs numbers are good, even though no one's really working. So yeah, there you go. Sales and furniture stores, you can tell falling. The interesting thing is sporting goods and hobby stores rose 2.8% from the prior month. So guess it's the summer season. If you look at it, the pools are opening. This is just, I think, seasonal sporting goods because you look at it in May, the pools are opening. So people are buying bathing suits and goggles. Hobby stores, probably all their summer stuff. And, people. So, I mean, I don't think that's really a sign of economic activity. Consumer spending is slowing because real income is moderating and some consumers are becoming credit constraint added elevated rates and credit card uh look at this, others downplaying the concerns with this print. Yeah, we'll explain the downwardly revised numbers if this print doesn't matter. So that just shows arrogance. Oh, we're not concerned about this bad print. Yeah, well, the last print was supposed to be flat. That was negative. So Anyway, let's and obviously the markets, like if you actually look at it, the markets, it's an election year, they're gonna do whatever it takes. At one point it was like if you look at it, really open strong, and then it just came down, and it was negative here at one point. This is the Dow. If you look at it in around three, and then just a mysterious buyer, I guess, came in. So, but as I said, it's an election year. This will not be the year to bet against the market, in my opinion. Well, if you look at it, as I said, if you follow this channel, you know the fundamentals, bad data, and look at gold. GLD, this is the GLD. Boom. Right after that, whoop, and it stayed up. So, yeah, regardless of what people said, anyone that says the US economic data is wrong, even Avi, he's wrong about that. This matters. Last decade was all, and they all, like, people say, why didn't gold go up under QE3? If you look at it, if you actually looked at it month by month, it did. It went up, and during December was sort of a sell off, went all the way up in January. And then if you look at the meeting minutes of the Fed in February of 2013, they talked about tapering. That's when the 2013 top began and led to the crash. So, and the economic data was incredibly strong in 2013. In fact, all they talked about was recovery, economic recovery. So, yeah, matters. Weak retail sales, gold goes up. Yeah, Wall Street cares about this. It's not None of it's true, but doesn't it is. The other things I've been looking at, look at this: McDonald's ending AI drive, the sainted, hailed AI,
company just scored the Comcast
and
business
of
5-year
course,
price lock guarantee.
stupid, the hailed, saint AI can't even work a drive-through, but it's supposed to save the economy. So anyway, there's that, and let's go to the next thing I've had for you all. Unrealized gain tax gains. Now, this would be the absolute worst thing. Of course, all these stupid pop-up ads. Unrealized tax gains coming sea change for 2025. And taxing unrealized gains. Now, they always say it's for the wealthy, but it'll be like the income tax. The income tax was supposed to be only for the top 1%. It's going to start off for the wealthy, but they're going to eventually uh, lower the standard. It'll be for only the billionaires. Then it'll be for the multimillionaires. Then it'll only be for the millionaires. Then it'll be, what's the famous people raising that only have 500,000, that's $500,000. Then they'll say Obama's famous, anyone that has over $250,000, that's a quarter million in unrealized gains that'll pay the tax. And eventually just everyone. So unrealized, this will, if enacted, will kill the market, because then you can't really own assets. You can't own stocks. You can't own homes. Because homes you can't just readily sell. And stocks, at least, you can readily sell. And this, I can see this backfiring, because if the market crashes, then you can, I mean, I'm not a tax advisor or anything, but it's like stocks, carry forward losses. And who knows, maybe they'll let you carry back your losses. So, interest given the property, and imagine patent rights. You own a patent and it becomes more and more valuable. Let's say you owned uh Microsoft and all those codes for Microsoft Office. So this will kill, I don't want to see that, so it makes me sick. This will kill the market. And then if you're allowed to tax unrealized gains, I would make the argument, well, can we put our cars as unrealized losses? If you're going to start taxing homes or stocks, I should be able to write off unrealized losses on my call. So I do not think, of course, Americans overwhelmingly reject this. Of course, are they going to get what they want? Democracy. No one knows who runs it, and people never get what they want. So anyway, let's go to the last article. The S&P 500 could be on the brink of a multi-decade bear market. Avi Gilbert. This guy's very accurate. The only thing I really don't agree with him is fundamentals don't matter. I think he's right though, that a lot of the fundamentals, the gold community and everything don't matter, but the economic data does matter. And I think sometimes things need multiple things and they have to all happen at once. Like printing of money alone won't just push gold up. In fact, anything can be counterintuitive because not all that money can flow to the stock market. People could sell gold to chase the market, but I think it needs printing of money and a weak economic data to do it. Perceived weak economy, but Avi's a fantastic researcher, and I do agree with him on this. He has a track record of being right a lot. He said could be near a topping event that could spark 13 to 21 year bear market. And I could see that. I think that part of it is America's on the verge of losing a war. I do not. I hope they make out a peace deal. There's also just big deleveraging. We talked about the bubbles, and that will Gilbert stated that by 2026, many markets will not be in good shape. You know, a lot of assets now are setting up quite similar. I do think gold will start doing well during this time. But we'll see. I don't know if he agrees or not. I hope he agrees because he's right a lot. This includes decades long one that talks about for the S&P that comes an index series of 5-way patterns stretching over various periods of times includes again in 1932. Asked chances analysts. The analysts stated that tracking his predictions suggest 30% chances his predictions can prove incorrect. Well, no one's right all the time. I mean, I was wrong about the market topping last year. Now I think let's just say I correct them. So there it is. There it is. Let's see. That's what the news, and that is my thing. I think stock market. I think international markets will do well during that time too. Not just gold. I will be looking to invest in international markets during that time. So, yeah, that's all I have. You know, obviously, one day I will, have this channel and do international markets. I love to be able to set up a newsletter where I can talk and write about stocks and write about good stock picking and everything and give that info. But I don't have the time or energy. I work full time. Tomorrow I will not be doing a video. I have tomorrow off, and I want to sleep all day and watch TV and spend time with my wife. So, anyway, remember, none of this is financial advice, just my opinion, thoughts on the market, and I will see you next video.